Many stocks have risen sharply from the March 2020 market bottom. Alternative energy stocks were some of the most loved by investors last year, including hydrogen fuel cell company Plug Power, NASDAQ Plug. Today, we will tell you why investing in Plug Power stock is a wise financial decision. Number 5. The good about Plug stock. Plug Power announced a series of strategic business moves over the last several months. In January, it announced plans with French automaker Groupe Renault, OTC RNSDF, to create a 50-50 JV to integrate Plug Power's fuel cell technology into commercial vans in Europe. The JV seeks to claim more than 30% market share in European fuel cell-powered light commercial vehicles. And in February, the company said it will partner with Acciona, a supplier of renewable energy infrastructure, to launch a 50-50 JV to serve clients in Spain and Portugal. The venture hopes to gain a 20% market share in the green hydrogen business. It also completed a deal with SK Group that will give the South Korean industrial company a 9.6% stake in Plug Power with a $1.6 billion investment. The two companies will also form a joint venture to establish a fuel cell factory and accelerate the expansion into Asian markets, including China. The plans to expand into new international markets comes as the company also grows its green hydrogen initiatives in the U.S. Plug Power plans to build North America's largest green hydrogen generation plant to serve the Northeast. It will use hydropower to make hydrogen in western New York, and combined with its Tennessee plant, the company expects to supply 500 tons per day of green hydrogen by 2025. When the new plant is fully built, the company said it will offer our transportation fuel customers pricing competitive to diesel. Plug also said in its earnings release that it remains on track to hit its recently raised 2021 and 2024 financial targets, which includes 2021 gross billings of $475 million, up from $450 million. Looking further ahead, the company said it sees 2024 gross billing at $1.7 billion, an increase of more than 40% from prior estimates. If those estimates turn into real sales and the company's expansion plan pans out, the stock could be a good investment in the future of green hydrogen. Number 4, financial strength. Plug Power's financial strength is of vital concern to both outside investors and internal stakeholders. Efficiency and cost control are keys to Plug Power's success. Along with its ability to generate sufficient cash flow to pay bills, repay debt, and make a consistent year-to-year profit. Financial leverage usually refers to the use of borrowed funds to amplify returns from an investment. In general, analyzing the relationship between debt and total assets helps investors to understand Plug Power's financial leverage. It provides some insight into what part of Plug Power's total asset is financed by creditors. By using current balance sheet information, investors can analyze the liability, assets, and equity of Plug Power's books and decide whether to invest or hold. Statistics such as return on equity, ROE, debt to equity, DE, help investors determine how Plug Power deploys its capital and how much of that capital is borrowed. Plug Power cash flow analysis is essential to understand how it generates and spends money over a specific period. It can also help you figure out where your money is going and how much cash you have available at a given moment. The company currently holds $715.12 million in liabilities with debt to equity DE ratio of 0.47, which is about average as compared to similar companies. Plug Power has a current ratio of 6.65, suggesting that it is liquid enough to be able to pay its financial obligations when due. Plug Power, PLUG, is traded on NASDAQ exchange in the USA and employs 629 people. The company currently falls under large cap category with current market capitalization of $16.2 billion. Market capitalization usually refers to the total value of a company's stock within the entire market. To calculate Plug Power's market, we take the total number of its shares issued and multiply it by Plug Power's current market price. To manage market risk and economic uncertainty, many investors today build portfolios that are diversified across equities with different market capitalizations. However, as a general rule, conservative investors tend to hold large cap stocks, and these looking for more risk prefer small cap and mid cap equities. Plug Power conducts business under industrial sector and is part of electrical equipment and parts industry. The entity has 589.68 million outstanding shares, of which 47.84 million shares are at this time shorted by private and institutional investors, with about 1.3 trading days to cover. Plug Power currently holds about $1.31 billion in cash, with $156.31 million of positive cash flow from operations. This results in cash per share (CPS) ratio of 2.87. Number 3. Improved valuation. In January, Plug Power stock was traded at a price-to-sales ratio of around 104. The ratio has now fallen to 51. Based on 2021 estimated sales, the ratio stands at around 37. Surely, it has improved a lot from its January levels. Going by Plug Power's estimates of 1.7 billion sales in 2024, the price-to-sales ratio falls to a saner level of around 10. For a fast-growing company, that kind of ratio isn't too unusual. So if the company can grow its sales as it is guiding, its valuation can make some sense. It is noteworthy that the price-to-sales ratio calculation for 2024 sales doesn't take into account potential dilution. In the last year, Plug Power's outstanding shares have increased 82%. Number 2. Focus on growth. Plug Power has been taking aggressive steps to grow its top line. In February, the company announced its plans to build a green hydrogen production facility in New York with a production capacity of 45 metric tons per day. Plug Power also recently signed a previously announced deal whereby South Korea's SK Group will invest $1.6 billion in Plug Power in exchange for a 9.6% stake in the company. The two companies plan to jointly establish a huge fuel cell and electrolyzer production facility in South Korea. The South Korean company has set ambitious goals for promoting hydrogen use in the country, which should benefit Plug Power. The company has also entered into partnership with automaker Renault. A planned joint venture with Renault will target a 30% share of the fuel cell-powered light commercial vehicle market in Europe. That would be huge, as 30% of the light vehicle market is expected to be around 500,000 vehicles by 2030. Plug Power has also announced a partnership with Econia, a leading developer of sustainable infrastructure solutions. With an expected investment of over 2 billion euros, the joint venture will aim to capture 20% share of Spain and Portugal's green hydrogen market by 2030. So Plug Power's 2024 sales guidance of $1.7 billion and sales growth beyond that look achievable. However, sales are just one part of the story. Let's turn our attention to another key metrics as well as risks. Number 1. Analysts say it's time to pull the trigger on Plug Power stock. While many growth stocks have suffered, often due to broader macro elements rather than company specifics, the same cannot be said of Plug. The shares have come under additional pressure after an audit found non-cash related errors while the company was getting its 10K filing ready. As a result, it will need to refile its fiscal 2018-2019 financial results alongside several recent quarterly statements. The saga is about to come to an end. Plug indicated its restatement would be done. At the same time, the company provided a business update. Plug expects Q1 21 gross billing to be over $70 million and net revenue higher than $67 million, compared to the streets called for $76.8 million and $74.8 million, respectively. Gross billings and net revenues for Q2 21 are also expected to come in lower than the consensus estimates of $106.4 million and $102.5 million, at over $105 million and more than $102 million, respectively. The weaker than expected Q1 21 targets are a non-issue to Evercore analyst James West, who says he is not valuing Plug on Q1 21 anyway. Of more importance to the analyst is the clarity around the 10-K filing. This update certainly helps to dissipate the shroud of uncertainty hanging over Plug shares, since it announced it would restate its previously issued financial statements this past March, West said. It is not a panacea, but we believe it is incrementally positive news, which comes on the heels of a bruising sell-off for clean energy sector equities. West rates Plug shares and outperform, i.e. buy, and has a $42 price target for the shares. Investors could be sitting on gains of 109% should West's forecast play out over the coming months. The hydrogen fuel cell specialist also gets full support from Oppenheimer's Colin Rusch. The five-star analyst notes that the company remains on track to deliver to Chart Industrial 2 15T-day liquefaction plants by the end of 2022, and thinks the company is poised to benefit from the changing energy landscape. Despite logistics and supply chain headwinds, Plug is navigating the details of its revenue ramp well and positioning itself to be the global leader in green hydrogen production, Rusch noted. We are encouraged that its fuel cell and hydrogen capacity expansions are on track, and we believe demand remains strong, supported by commitments by 1,900 companies with $25 trillion in market cap to reach net zero emissions by 2040, in addition to government support. Rusch's price target is even more optimistic, with West at $62. The figure is set to provide one-year upside of 209%. Needless to say, Rusch's rating stays and outperform. According to the rest of the street, the severe drawdown in Plug shares represents opportunity. The $52.79 average price target could yield returns of 163% in the year ahead. All in all, the analyst consensus rates the stock a moderate buy based on 9 buys, 5 holds, and 1 sell. Let us know in the comment what you think. Does Plug Power have a good future? Please subscribe to the Stock Advisor. Thanks for watching.